In this Hauseit tutorial, we'll go over the pros and cons of investing in real estate versus the stock market and the tax benefits of real estate investing. We'll also challenge some commonly accepted advice, such as buying investment property in an LLC. If you're thinking about buying an investment property, you may also be interested in estimating your buyer closing costs in New York City using Hauseit's interactive closing cost calculator, available at www.hauseit.com. You can also save money on your purchase by requesting a Hauseit buyer closing credit. Should I invest in real estate or stocks? Unlike stocks, real estate opportunities are much harder to identify and transact. A real estate investment in New York City can take months to identify, negotiate, and close. You'll also need to consider timing and your expected holding period when deciding between New York City real estate and the stock market. Stocks and bonds have minimal transaction costs, and you can usually exit an investment within the same day, compared to 6 months or more when it comes to selling a property. Even if you're able to find a buyer, your returns will be crushed by high real estate broker fees and other selling closing costs. You should also think about lifestyle considerations when it comes to real estate versus stocks. While it's possible to live anywhere in the world and manage a stock portfolio, you may have to stick around in New York City to maintain your rental property. Lastly, you'll need to consider the work involved post-investment. With stocks, the work involved is effectively zero unless you count voluntary analysis of company filings and economic data. The work involved post-closing with rental property can be substantially more. As a landlord, you'll need to find and screen tenants, manage repairs, address complaints from tenants, maintain books and records, and follow all local rules and regulations, such as ensuring that smoke and carbon monoxide detectors are properly installed and proper notices are posted. Tax benefits of buying investment property. The best thing about buying investment property in New York City are the tax benefits for landlords. As an investor, you can write off all expenses associated with your investment property against the rental income of the property. That means your property taxes, your common charges or maintenance, your mortgage interest, depreciation, and any miscellaneous costs associated with repairing or maintaining your property. The biggest kicker here is depreciation, which is a non-cash expense. According to the IRS, investors can depreciate a residential rental property fully over 27.5 years. That means you can depreciate just over 3.6% of the property's cost basis every year. Buying rental property in an LLC. Should you follow the commonly accepted wisdom of buying property in an LLC as an investor? While the benefits are obvious, such as privacy from having your name indexed in public records and limiting your liability to the specific property, it's important to consider whether the cost and hassle of maintaining an additional LLC is worthwhile. For starters, most small property investors with a few rental units may find it more economical to simply purchase a personal umbrella insurance policy to provide additional coverage in excess of the insurance provided through their regular home insurance. This provides a similar benefit to the limited liability from an LLC structure and mitigates the amount of additional fees and paperwork associated with having an LLC for each property. Furthermore, if a tenant decides to sue you, they can always name you in the lawsuit along with the LLC if they've discovered your real name.